Hi everyone and welcome to our budget briefing webinar. I'm Chloe and I head up our marketing at 360. I'm joined by my colleagues Andy Steele and Sophie Holmes, and we're going to be hosting the webinar for us today. Andy and Sophie, do you want to introduce yourselves?
Yeah, afternoon to all the attendees and good evening to anyone watching us on Dave next week. I'm Andy Steele, I'm one of the directors at 360. I suppose I've spent much of the last 12 months just trying to get my head around all of the COVID government support that's available and been trying to present that to our clients in a sort of understandable form. And hopefully that will continue with the things I'm going to be talking about later today.
I'm Sophie, I'm one of the chartered accountants at 360 and I work in our accounts and tax department. Very similar to Andy over the last 12 months, assisting clients with coronavirus support and helping them with things like projections for CBILS and bounce back loans.
Thank you. So if you have any questions, drop them in the chat box or the Q&A box. I'll be keeping an eye on these to ask Andy and Sophie any questions on your behalf. And this will also be recorded and uploaded to our YouTube channel 360 TV on Monday, and a link will be sent to you via email as well. So we'll start off with, firstly, Andy, do you think it was a business-friendly budget?
I think both myself and many people were very surprised at just how business friendly it was. I think there was a big concern that we're clearly going to be left with a huge bill for the pandemic, both in terms of lost tax revenue and the cost of all of the various, grants, etc., that the government were releasing on an almost daily basis at the start of the pandemic. So there was a real concern that there would be a huge increase in various sorts of different taxes, reliefs, etc., possibly earlier than the economy can really afford them. So I think they've probably kicked the can down the road, I think it's fair to say. Corporation tax increases have been delayed until April 2023. There was a real concern that capital gains tax would be increased, entrepreneurs relief or business asset disposal relief, as it's now known, would be scrapped. And I know there was a real flurry of corporate activity in the lead up to the budget last week. People trying to sell the businesses. I think there was a lot of solvent liquidations of businesses that had sort of come to a natural end, or perhaps had enough as a result of the pandemic. Fortunately, that didn't transpire. But I think it's safe to say that at some point in the future, there will be tax increases other than the ones that we'll be covering today. So for now, I think the general consensus is that it was business friendly. They've perhaps missed out on an opportunity to claw back some taxes from the businesses that have done really well during the pandemic. A lot of essential retailers have had a bit of a boom period during the last 12 months. Supermarkets have been generally raking it in because, for periods, takeaways were shut, restaurants were shut, people were bored, so they were sort of eating and drinking at home. And they've also benefited from the business rates holiday. Many of the supermarkets have actually sent that back because I think they feel a bit guilty that they've sort of been having the cake and eating it, but some of them haven't. So has the government missed out on an opportunity to tax them and some of the online retailers that have been doing really well? I think that the answer to that is possibly yes, but it's obviously a matter of opinion. I'm sure that the supermarkets will be absolutely delighted with the budget, because they've been creaming it in and they're just going to be paying tax at 19% like everybody else. So yeah, in summary, I think it was very business friendly.
Yeah, thank you. Sophie, do you think it's been kind to individuals?
I think it's a bit of a mixed bag, really. From one hand, yes, as Andy sort of mentioned about the entrepreneurs relief and the capital gains. But from the other side, with the personal allowances, you know, there's a slight increase for 21-22, and then it being frozen. It is going to obviously end up with people starting to pay slightly more tax, particularly as the national minimum wage has increased. So from that side, not as personal friendly. It's definitely been, I think, an overall more business friendly budget.
Okay. So I'm going to now bring up a poll, just for you all to answer. It's our first time doing this on here, so I'm hoping it works okay and you can all see it anytime now. So it's a simple question: do you think it was business friendly budget? Yes or no? And also, if you are on Twitter, if you can mention us with the hashtag 360 webinars, that would be really appreciated. I'm now going to back to our presentation and we'll start off with Andy.
Thanks, Chloe. So I'm going to cover the additional COVID support that was announced in the budget initially. I'm going to start with the coronavirus job retention scheme, which is otherwise known as furlough. Probably the world's worst kept secret, in that it was going to get extended. The only question was, how long is it going to be extended by? And the answer to that is it was due to end 30th of April, but it's now been extended to the 30th of September, which is generally good news. I think most people will agree. For the employees, there's going to be no change. So they're still going to be getting 80% of their salary for the hours they're not working. Employers can still top that up to 100% if they choose to. No change for the employers up to the 30th of June, but in July, they will be asked to contribute 10% of the cost, very similar to what happened at the back end of lockdown 1, I think it was last year. And then in August and September, that will increase to 20%. They've also opened the scheme up to some employers that were previously excluded. So as of the 1st of May, so in 6 weeks' time, anyone that was employed on the 2nd of March this year will be eligible for furlough, provided HMRC were told about them via a real-time information submission prior to the 2nd of March. So that's good news for anyone that's taken people on during the pandemic, but have perhaps seen a downturn during lockdown 3. I suppose the big question is an extension to the 30th of September long enough? You know, we're currently expecting, hoping, all of the restrictions end on the 21st of June. So that gives 3 months for pretty much every sector to try and recover. You know, will events have recovered by then? Will the travel industry be back up and running at full pace by the 30th of September? I guess time will tell. There is the opportunity to extend it further still if some sectors are still struggling. But I guess at some point we're going to have to draw a line and be realistic. You know, if these people are still furloughed at a certain date in the future, is there actually a job for them to come back to? Next, I wanted to talk about the self-employed income support scheme. Again, that was due to end on the 30th of April. That has also been extended to the 30th of September. Now, there's been a lot of publicity about the excluded UK self-employed people, and the Chancellor has tried to address that by opening the scheme up to people that were previously excluded. So as of the fifth claim, anybody whose turnover has decreased by less than 30%, who was eligible for the previous grants or started trading in 1920 and had filed a tax return by the date of the budget, will be eligible. Self-employed people whose turnover has dropped by less than that will only qualify for 30% of the grant. So the government claim this will open the scheme up to another 600,000 people. Again, I guess time will tell in that respect. People that have claimed the first 3 grants will automatically qualify for the next ones, provided they're still affected by COVID. And we think the 4th grant claim portal will open in April, which is actually quite a long time to wait. It's been a while since grant 3 was received, so there's been a little bit of kickback on that. So good news that it's been extended, but perhaps a little bit of disappointment that the grants aren't coming a little bit quicker than planned at the moment. The next big announcement was the restart grants. So the government have allocated 5 billion of funding to local authorities, and they've promised a grant of up to £6,000 for non-essential retailers upon reopening, and up to £18,000 for the likes of hospitality, accommodation, leisure, hair salons, beauty salons, and gym businesses. That is a per premises grant, much like the grants that they've been receiving during lockdowns 1 to 3. Anybody with business premises that have been forced to close that are within the rates regime will presumably qualify automatically. We hope the payments are automatic like the previous ones have been, but we just need to wait for the small print when it's released by the various local authorities. The reason hospitality, etc., is getting more than non-essential retail is because they've been closed longer and their reopening dates are further back than non-essential retail, who are allowed to hopefully open in the very near future. The next extension that they announced in the budget was the business rates holiday for those in retail, leisure and hospitality. So this was due to end at the end of the current financial year, i.e. 31st of March. It's been extended to the 30th of June. So that sort of ties in with the 21st of June aspirational date for things returning to normal. And thereafter, for the remaining 9 months, the rates will be discounted by 2/3. And then there's also caps depending on whether you've been able to actually stay open. So essential retailers will get less of a discount than the businesses I've mentioned previously who were forced to close. So that's really, really positive news for those in the hospitality, etc. sectors. They now know when they're going to have to start paying rates again, so it gives them an opportunity to plan the cash flow accordingly. We're ready to move on to the next screen, please, Chloe. There's a few other sort of minor reliefs mentioned on the screen there. The next thing I wanted to talk about, though, was the recovery loan scheme. This is a new scheme that was announced in the budget. and it's on the back of applications for Sybil's and bounce back loans closing on the 31st of March, so at the end of this month. There was a worry that businesses who were looking to invest in reopening or growing their business, etc., there was a worry that they may struggle to access funding. It's always more difficult to access funding during an economic downturn. So they've announced this new recovery loan scheme, which kicks in on the 6th of April this year. It's going to be open initially until the end of December. Very similar to Sybil's and bounce back loans in that the loans will be guaranteed by the government up to 80% of the loan value. So it should make the banks and the funders a little bit more willing to speculate with a loan. Unlike Sybil's and bounce back, it's not interest free for a period, and there won't be automatic payment holidays, but it will nevertheless be a really good opportunity for businesses that are perhaps short of assets or short of a recent positive trading history to access funds that they might not otherwise be able to. And it's likely that the high street banks and all of the sort of well-known funders will be providing these schemes. Another welcome extension was the extension of the reduced rate of VAT for hospitality, holiday accommodation and tourist attractions. So that's now been extended to the 30th of September. So it stays at 5% until that period, and then it goes up from the 1st of October to 12.5%, and then back to normal, i.e. 20% on the 31st of March 2022. I think the hospitality sector in particular has really benefited from this recently. You know, the VAT saving was intended to be a VAT saving for the business rather than it being passed on to the customers. Some businesses have passed the saving or some of the saving on in order to make their prices more attractive to the customers. But I think generally the businesses have kept the VAT saving for themselves because they obviously know that there's going to be periods where they're closed, or, you know, it's quite simply more difficult to make a profit at a time when you're having to socially distance your customers, you're having to restrict the number of people into your business, and previously you're having to throw them out at the curfew time. So I'm delighted that that's been extended until the end of the next tax year, effectively, and I'm sure that businesses operating in those sectors will agree. Just a minor point as well, the reduced VAT rate might give you some opportunities to do some clever sort of VAT planning with deposits that you're receiving in advance of the VAT rate going back up on the 1st of April 2022. So if you're in one of these sectors and you are receiving deposits, have a chat to us about how they should be dealt with going forwards. Next slide, please. Moving on from the COVID support onto the support for the UK housing market. I think the buoyancy of the housing market has surprised many people during the pandemic, and I think it's really on the back of not just the stamp duty holiday that was brought in several months ago. I think also there's a lot of activity in the housing market because people are wanting to move to more sort of pandemic friendly houses. You know, they don't want to be locked in a in a flat, they perhaps want gardens, etc. And also with people working from home, do they now need to actually live within 45 minutes of the office? Can they now live further afield if going forwards they're going to be working from home some or all of the time? I think possibly there's been a little bit of a slowdown in sort of city centre living, high-rise living, etc. But certainly the houses in the sort of suburbs, countryside, etc. There's been a lot of demand for those, and I expect that to continue now that the stamp duty holiday has been extended to the 30th of June. From the 1st of July onwards, there's still a holiday, but the nil rate band halves to 250,000. Then it goes back to the traditional £125,000 from the 1st of October 2021. Given that furlough ends 30th of September, it'll be very interesting to see what happens to the housing market thereafter. But the government seems committed to create a nation that owns the houses. They've been attacking landlords for several years now. And some of the initiatives that they announced in the budget, the mortgage guarantee scheme, for example, really shows that they are committed to getting people on the housing ladder sooner rather than later. So it's probably a good time to be owning your own house at the moment. In the short term, certainly. In the medium term, it obviously depends on what happens to unemployment, the state of the economy, etc., etc. I think I'm out of time now, so I'm going to hand over to Sophie.
Thank you. So I'm going to be talking about the taxation changes that came into place. So the first one to touch on, as I spoke about earlier when Chloe asked about our thoughts on the budget, is the income tax changes. So there is a slight increase in the basic rate threshold for 21-22, going up from 37,500 to 37,700. And also the personal allowances are increasing from 12,500 to 12,570. So those come into place from the 6th of April for the 21-22 tax year. They're then going to be frozen until April 2026. So they will see a slight change. Oh, sorry, I lost the screen on my computer. So as I was saying, yeah, they're frozen until 2026. Individuals will start to see, they won't really notice it to begin with, but they'll start to see that they're paying slightly more tax as salaries hopefully increase, particularly with the minimum wage increasing as well. So it's quite a clever way that the government are able to sort of recoup a little bit of tax without people sort of really realising that there's going to be some tax that they'll be paying extra. The national insurance limits have also remained frozen up until 2026, and same with the lifetime allowances for pensions as well. So they are frozen at 1,073,100. The starting rates for savings, the band of savings that is at 0% again will remain at the current limit for 2021. So on a personal tax sort of side and on an employee side, not too many changes that are going to be going forward. A slight increase for this year, and then many of the rates will remain frozen for the next few years. There's a small change in the cycle to work scheme. And then if we can just go on to the next slide then, please, Chloe.
Can I just interject just for 1 second, please, Sophie? The Conservatives made a pledge in the manifesto not to increase taxes. So it could be argued this was a very clever way of increasing taxes without increasing taxes. Freezing the personal allowances is a a good way of collecting more tax without actually increasing the headline rates. So some might argue they've been clever, some might argue they've been a little bit cheeky, some might say they've been really devious. I guess it depends on your political outlook as to which of those three you believe is the case. Sorry, Sophie, back to you.
No, not a problem. So the government last year with P11Ds introduced various benefits for getting electric cars and low emissions cars. That is also coming into effect for vans from the 6th of April 21. So any businesses that offer workplace vans that are subject to a P11D, if they are zero carbon emissions, there'll be a benefit to them in the tax position. Corporation tax, as Andy mentioned earlier when he was talking about the budget being very business friendly. So corporation tax is remaining at 19%, and there's no change in that until April 2023. The increase then is companies with taxable profits in excess of 250,000 will then be taxed at 25%. Businesses in between profits of 50,000, where the 19% rate runs up to, and up to that £250,000 limit, there'll be a tapering effect for the amount of tax that will be due. For capital gains tax, as we alluded to as well earlier, there haven't been any changes in the rate. So the annual exemption amount is still fixed at 12,300. And again, they fixed that up until April 26 as well. One of the big things that will be to many business benefits, particularly with the pandemic, if they've been struggling with trading, is the carrying back of taxable losses and trading losses. So previously you used to be able to carry back losses 1 year, and they're extending that. And it can be up to £2 million, sorry, up to a cap. That is subject to if you're in a group, and there's also likely to be restrictions if you are shortening or extending your year end as well. But we'll be able to see more obviously when the small print comes out and things like that. If we can go on to the next page, please, Chloe. So they introduced another benefit to businesses, which is the new investment relief. So previously, businesses who purchased plant and other equipment could claim capital allowances. They're now able, from the 1st of April up till March 23, they can claim 130% back of that expenditure. And businesses that qualified for the special rate relief will qualify for 50% of their first year's allowance. The limit of £1 million as well is also continuing up until December 2021. On research and development, they continue to offer that to businesses, which will be a big plus to businesses, particularly as they start to come back to normal trading and maybe look at start going back into doing more research and development. The amount that a company can receive under the SME R&D tax credit is being capped at either £20,000 plus 3 times the company's pay-as-you-earn and national insurance contribution. It's they've put that in to deter any tax evasion or any abuse. Enterprise management incentives, which businesses were encouraged to do to sort of generate investment in the previous times. That is still, they've extended the time limit on that due to the impact of coronavirus that it's had over the last few months. And then they also introduced, in order to assist with being a global player to do with free ports, they've introduced 8 free ports in England as well.
One of which is the Humber.
It is, yeah.
Which is presumably great news for the region. Can we just quickly go back to the the super deduction as well, the new investment relief. I think that's the area that I've been getting the most questions from clients of mine. Clearly, the government have done it to try and encourage businesses to invest in, spend money in plant equipment, refurbing warehouses, becoming more efficient. So, rewarding a business that spends £1 on investing in their future with £1.30 worth of tax relief, very similar to the R&D tax reliefs that Sophie mentioned earlier. I think there's been a really positive reaction to that, and it's got businesses thinking, well, there's this project that I've had on hold. I've been a little bit wary of taking a bit of a risk, but now I know I'm going to be getting a significant amount of tax relief on the investment. And also potentially there's some cheap funding available with the new schemes that I mentioned earlier. I think this is going to give the economy a real sort of boost. And it's going to be really useful for businesses that are in the process of reopening and perhaps need to spend a little bit of money on their premises, sort of getting it ready for trading again. It also leaves a few businesses a bit of a planning quandary. So if your year ends 31st of March, we'd usually be saying to our clients, are there any investments that you need to make before the end of your year end in order to get the tax relief this year rather than next, i.e. accelerating the corporation tax relief by 12 months. The discussions we're having now is actually, should we delay it until the 1st of April, because we're going to be getting £1.30 tax relief rather than £1. So we're getting the tax relief later, but we're going to be getting more tax relief. So we're going to be having a lot of discussions about that in the next couple of weeks, I'm sure. And then also, as we get close to the end of the new relief, i.e. 31st of March 2023, I'm sure there'll be a lot of activity in terms of people pushing forward projects to make sure they get the tax relief before it drops down to the old capital allowance reliefs. So lots of excitement around that initiative, and I'm looking forward to looking at that a bit more closely with our clients that are looking to grow over the course of the next couple of years.
Yeah, I think we've seen that amongst quite a few clients. A couple haven't really realised that it starts on the 1st of April, thought it was happening sort of immediately from the budget. So as Andy said, they've sort of done a little bit of tax planning to work out what would be the most beneficial to them, whether to buy it sooner or give it a couple of weeks for that extra tax relief. But it's definitely, I think it's going to be a topic to discuss with probably most of our clients, and most businesses will be having this discussion over the next couple of years while this extra relief is in. If we can flick onto the next page, please, Chloe. So just finally, to finish off on the taxation changes then, the first one with inheritance tax, again, like many of the other taxes, again, they've frozen those rates until April 26. So the nil rate band is still £325,000 before any inheritance tax is due. And again, on VAT, there's been no changes to the registration limit. That remains at £85,000. And that is frozen until March 2024. As Andy mentioned earlier as well, there was also, they didn't scrap entrepreneurs relief as it was known, or business asset disposal relief. And again, I think that's something that we'll see a lot of people thinking about their sort of long-term plans and whether they need to look at maybe bringing any of those forward. So if they were maybe planning on exiting in 7 or 8 years' time, do they look at potentially bringing those forward before there's any further changes in the rules for that? So as well as businesses planning for things like capital allowances and the other reliefs. I think as well that'll be something else that businesses start looking at planning and any exit strategies that they have. So if we can just move on to the final section, which is just other announcements. So as I mentioned earlier, the national living wage has increased, and that is going up to £8.91 from the 1st of April. They've also continued to increase the universal credit. So that was extended. It was increased during the pandemic, and they've extended that for a further 6 months. There's been no increases on alcohol or fuel duty, and the ISA investment limits. The adult ISA investment limit remains at 20,000. The junior remains at 9,000, and the child trust fund also remains unchanged at 9,000 for the next tax year.
I think the increase in the national living wage is very interesting. As you said earlier, Sophie, this will push more and more people into the tax regime, which is another backdoor way of raising more tax revenue. Also interesting that the national living wage of £8.91 is getting much closer to the real living wage of, well, it's currently £9.50 in the UK, £10.85 in London. The government seem to have jumped on the living wage bandwagon, which perhaps causes a little bit of confusion, because we now have effectively 2 living wage rates. But it would appear that the aspiration is to get the national minimum wage up to the real living wage amount, which can only be good for the country in the long term. Although I imagine some retailers and some hospitality businesses could do without an increase in the national minimum wage right now. So yeah, interesting times in terms of the living wage going forwards.
I think as well it'll also have an impact, as you were saying earlier, when people look at, as furlough comes to an end, and what happens future-proofing people's jobs. At the minute, obviously, if people are on furlough in, for example, the hospitality industry, but they can still get 80% of that back from the government. I think as furlough comes to an end, as we've said, and people are looking at, is there job availability and can they afford to keep people on? This will obviously add to that sort of dilemma that people and business owners will be having across the country. So if we can go on to the next page then, please, Chloe. Just a couple of final things. So there's been a couple of visa reforms that came in to force. The single contactless payment is being increased from £45 to £100. Some of that is aimed at, obviously, hopefully when the economy reopens up and businesses start to open up, to encourage consumer spending. And the Help to Grow scheme is opening around autumn, which is aimed at providing management training to a lot of businesses. And there's also a digital one as well. It'll be interesting to sort of read about this in a little bit more detail as it comes into force, about what sort of training, in like a bit more of the small print as to what's included, and how obviously businesses go about applying for that. I think particularly as a lot of businesses have been working from home and had a lot of time to think about how they structure their business and their strategies for going forward. I can imagine there being quite a lot of take up on this to sort of help them get their businesses ready for the next step post-pandemic. And then I believe that is the end of my sections. I think we're now on to the question and answer, if we have any. Chloe?
So no questions as of yet in the chat or the question and answer box. So feel free to drop them in there, and I can pass them on to Andy and Sophie. Again, just a reminder, if you are on Twitter, we've got a hashtag of 360 webinars. If there's anything that you forget to ask or you miss anything, then we're obviously here afterwards and on an email. Easy to access on an email or a call for any questions that you missed.
Chloe, I think we had some questions on social media in the run-up to the webinar, didn't we?
We did, yes. So we got 3 questions. So the first one was, can you claim the 130% super deduction on cars?
Well, the answer to that is no. It's things that used to qualify essentially for the 100% capital allowance. So it's sort of plant, machinery, equipment, IT equipment, vans stroke commercial vehicles, but not cars. And you know, I suppose it's pretty logical that it doesn't apply to cars, because the government have been heavily taxing company cars over the course of the last few years. They've been trying to encourage, well, I say they've been trying to encourage people to use more green methods of transport. They haven't, they just wanted to collect more tax because they knew everyone would stay in the cars generally. So other than electric cars, where there are some quite generous reliefs for investing in cars with zero emissions, generally the tax relief on cars has been getting worse and worse with each sort of government. So the answer to the question is no, not cars, but many other things that a business may be thinking of investing in.
Okay, thank you. The next one was, any changes to the bounce back or Sybil's in the budget?
Shall I take that one as well, Sophie?
Yeah, by all means.
So there wasn't any announcements in the budget other than the replacement for Sybil's and bounce back loans, which I mentioned earlier. There were some changes announced prior to the budget though. You know, as we're approaching the anniversary of the first bounce back and Sybil's loans, which, I think, was it May, late April, May time, if memory serves me correctly. You know, as we're approaching the anniversary of those and the first repayments becoming due, I suppose the worry was businesses are still closed or have only recently opened. Are they really going to be in a position to start repaying these loans when they've also got interest on the loans to contend with for the first time? So again, hats off to the government. What they've decided to do is they've given businesses the option to extend the loans, whether it be bounce back or Sybil's, from 6 years to 10 years, which will decrease the monthly payment commitment on the cash flow. They've allowed businesses to extend the payment holiday from 12 months to 18 months. And many of the lenders, if not all, are bringing in an interest-only option for a period. So if a business can perhaps afford to pay the interest, but isn't quite ready to also start making capital repayments, then you can apply to go over to interest only for a period. And I know many of the banks are now contacting the businesses that have taken these loans out, particularly bounce back, because the rollout of the bounce back was much quicker than the Sybil's, and generally people that took bounce back loans out are getting closer to the repayments being due than those that took the Sybil's out. The banks are contacting the customers and asking them how they're doing and do they need any further support with their government-backed loans. I guess looking at it from a more negative point of view, there will be businesses that have failed in the last 12 months. There's also worries of, bounce back and Sybil's fraud. Have some unscrupulous individuals taken bounce back and Sybil's loans, spent it on stuff they shouldn't have done and disappeared? So I guess once the anniversary of the first repayments come around and the banks realise that in some situations there's no business there to take a repayment, it's at that point we'll start knowing the extent of this rumoured fraud. So that's that is a slight worry. But again, time will tell in that respect. And I guess any fraudulent use of these funds will get added to the bill that our children, grandchildren, great-grandchildren are saddled with.
Got a question.
Sorry to end on such a negative note, but it's the truth.
We've got a question. For the R&D relief, is the 3 times multiplier on the total PAYE and national insurance, or just the employer's liability?
Just let me read that question again. My honest answer to that is I need to double check, but my instinct tells me it would just be the employer's national insurance, because the rest of the pay as you earn is a cost to the employee. But I need to double check that. I can see who it was that asked the question, so I'll get our R&D manager to get back to you on that. I won't mention your name in case you wanted to stay confidential, but we'll be in touch on that. Unfortunately, me and Sophie don't get that involved with R&D. It's Andrew Jordan, our R&D manager, that looks at all of those projects. So he'll answer your question on Monday morning if that's okay. But thank you for the question.
The last question we had was any changes to auto enrolment announced in the budget?
Would you like me to take that one?
Yeah.
So there hasn't been any changes, unfortunately, to the auto enrolment in the budget. An employee still has to earn over £10,000 to trigger the auto enrolment eligibility. There are a couple of other criteria, things like age as well, but earnings, it's £10,000, and that makes them eligible for auto enrolment. It's calculated, however, on their salary above 6,240, and that rate hasn't changed for 2021. So any earnings above that limit will be subject to the auto enrolment. The percentages as well also haven't changed, so it's still 3% employer contribution and 5% employee contribution. The employer can contribute more and the employee contribute less. They can't contribute any less than 3% as an employer, but they could, in theory, contribute the full 8% and the employee contribute none. However, it does still have to be a minimum of 8% in total.
Many commentators, since the introduction of auto enrolment or workplace pensions as it's otherwise known, many have suggested that surely it's only a matter of time that it becomes the case that you're not allowed to opt out of auto enrolment. So basically it becomes law that you have to contribute into a personal pension, and also your employer does, because at some point many believe that state pension will be scrapped and it'll move over to a solely personal pension scenario. You know, no hints of that in the budget. But you know, many believe that at some point, perhaps when the economy is in a healthier position and employers are perhaps making larger profits and are in a better position to contribute into everybody's pension rather than those that haven't opted out. You know, many believe that that will happen in the future, and perhaps the cost of COVID means that the inevitable will ultimately be brought forward a year or two. Again, I haven't got a crystal ball, so it's all speculation, but again, time will tell in that respect.
I think as well with as we've gone back to a couple of times, the minimum wage increasing as well, it's going to end up pushing more employees potentially into requiring a workplace pension as well. So some employers that, you know, potentially employ quite a few people on part-time that don't go over that £10,000 a year, it might start pushing a few people over that, meaning that an employer who previously didn't have to offer a workplace pension unless the employee requested to be part of one, are now going to have to get a pension scheme set up and administer that, even if the employees do choose to opt out as they currently can at the moment. So we might end up seeing a few more businesses having to manage their pensions and look at getting one set up as well, particularly as people come off furlough and hopefully people start going back to more normal hours in things like hospitality and retail. Yeah, we could end up seeing quite a few more with that requirement.
Thank you, Beth. So we've got just under 10 minutes before we finish. As I've said, if you've got any questions that you want to ask still, put them in the chat box.
I'm just going to have a quick look on Twitter, see if anybody's asked anything on there. If not, we'll have to start singing a song or something.
I don't think anyone wants to hear that on a evening.
I can't see anything on Twitter, so assumption there's no more questions. Perhaps now is a good time to wrap it up.
Yeah.
I'd like to thank Chloe for organising this. I know there's a lot of hard work goes on behind the scenes, you know, setting it up, producing the PowerPoint, bullying people into doing the presentation, etc., etc. So thank you so much for organising this. I know, as you mentioned earlier, it will get uploaded onto 360 TV. Somebody's just thanked us for the presentation, so thank you for the feedback. Thank you, Sophie, for all the hard work you've done in preparing your part of the presentation. Thank you to all of the attendees. Please, if you do think of any other questions after the event, send us an email, DM us on social media. You'll be sent a feedback questionnaire sometime next week. Is that right, Chloe?
Yeah.
Any positive or negative stroke constructive feedback would be greatly appreciated. If you've got any ideas for future webinars, please let us know. Our next webinar will be in around a month's time. I don't think we've got a subject for that yet.
To be confirmed.
And our next Saturday surgery, which would normally take place on the first Saturday of the month, but because that's Easter Saturday, it's happening the Saturday after. The topic for that Saturday surgery is anything goes. That's right, isn't it, Chloe?
Yeah, so yeah, startups, growth, end of tax year, anything goes, basically. Yeah,
so even if it's just a shoulder to cry on because you've had a tough 12 months, you know, or you need someone to bounce an idea off, you know, anything goes. So if you know anyone in business who's struggling, has got a particular challenge, something they don't understand, perhaps they just can't see the wood for the trees at the moment with everything that's going on. You know, we're more than happy to help them if we can on our Saturday surgery. If we don't know the answer to the problem, we probably know somebody that does. And then the last plug, if we've got any Xero users out there, the cloud software Xero, we have a Dr. Robinson monthly Xero surgery hosted by one of our colleagues, Paul Robinson. He's been using Xero for 10 years now. He's one of the most experienced Xero advisors in East Yorkshire. So, you know, but keep an eye out for his surgery. He'll be able to look at any problems you've got, anything you're struggling to reconcile, or even if you want a demo, he's more than happy to do that. Keep an eye out on our events page for further details on all of those things. I'm going to shut up now. 4 minutes to 5, so perfect timing. Thank you everybody once again, and I hope everybody has a really good weekend. Make sure you recharge the batteries, turn your work emails off, get nice and fresh, ready for another presumably busy week next week. So
Thanks everyone.
Thank you.
Thank
See you
you.
all soon. Cheers.